Did you watch the French Open over the weekend? Man, that was exciting. I've never seen a more clutch player than Alcaraz. What we're thinking is you ride the market until it bucks. And by bucking, we mean breaking the 200-day moving average. That's where we're going to get more defensive. So we're roughly at 6,000. The 200-day moving average is 5,800. But we're also thinking about in front of us. What's in front of us is there's really bad seasonality that generally occurs in August and September and sometimes October. So hopefully we can get a nice rally in some of these sectors before then. But the technology sector, i.e. mostly the Mag 7, are really starting to underperform. They're lagging, and they just need to hang in here and let the other groups kind of bounce a little bit. So we think there's a lot of stocks that still look attractive. In terms of the market, I think the market gets sweaty palms when it dips below 6,000 in short term. So that's kind of what we're hoping is it can stay above the 6,000 level and stay above the 200-day moving average. The news should be pretty good going forward. We got the tariffs, probably a lot of positive news coming there. And then we have the Senate doctoring up this big, beautiful bill. Hopefully they can make it beautiful. Russia and Ukraine is one of our concerns, and that would likely impact the price of oil if it didn't go the right direction. And then Iran, we are not too concerned about Iran. Iran's really not too much of the supply of oil in the world at this point. But if they don't come to an agreement by the time the end of June comes around, we kind of think that those nuclear sites turn into craters. Trump, Musk, only thing we conclude out of that is that it sure was weird and not totally surprised at how it all ended with these two big personalities. Not sure if it continues, not sure if Tesla is really investable anymore. CPI report is on Wednesday. We're not concerned about inflation. There's things that are preventing inflation going up, and the price of oil has been driving that trend in a big way. But if the oil prices do go up, we think it's temporary, but it is a risk. Then we have housing prices coming down, so we think that there's probably a benefit to CPI because prices of homes around the country are now starting to decline, and that'll filter its way into owner's equivalent rent, which is in CPI. And then finally, there's not a lot of money supply growth. So without the big money supply growth, you're not going to see any sort of big inflation. So tariffs can't really be a big problem without big money supply growth. So we're not concerned about inflation. What we are a little concerned about is these initial claims. So these are first-time unemployment filers, and you can see here it's been generally well contained. Got to as low as about 205,000 people filing for initial claims at the beginning of 2025. Last week it was 247, so it is up, but it's kind of in this band. We think if it breaks above the 300 level, or maybe not quite that high, but if it breaks up 280, 300, people start to become concerned about a recession and then because concerned about 2026 earnings. So just keep that in mind. Initial claims are filed every week. So we're expecting 250,000 on Thursday for initial claims. So again, above 300,000, we'd be much more concerned about it. The rotation. So we think that the equal weight S&P is the spot to be in terms of having that S&P exposure. The Mag 7 want to basically stay out of the whole group. There are some technology stocks that we do like, but we don't like the mega cap technology stocks in general. Energy is going to bounce, we think, even without the Russian-Ukraine situation getting any worse. That sector got way too beat down on oil prices coming down. We think the oil prices probably stabilize in the $60 level. So we think there's some upside. And in particular, natural gas stocks. We like those a lot. Healthcare, we think people will rotate into healthcare stocks because a similar situation, overly beat up, price concerns, RFK. These are high quality companies with good demographics around them. We think they're probably too cheap at this point and will bounce from here. In general, again, think about August, September, probably getting more cautious. What we want to think about is that as we approach that, as we get some good movement, hopefully in some stocks, we take some profits. So maybe having a little extra cash going into the back half of summer. Now, in terms of charts, we mentioned this last week. The Mag 7 big decline. Much worse than the overall market. Big bounce. We think it's gotten ahead of itself in terms of the bounce. Year to date, Mag 7 has underperformed the S&P and the equal weight S&P. We like the equal weight S&P more so than the S&P, but we think both are probably better than owning the large cap technology stocks at this point. Now, energy should bounce. Had a couple of nice oversold conditions turn into nice bounces. This is kind of in the midst of a bounce, but this is a bigger bounce to occur. It's breaking above the 20-day and the 50-day moving averages, so we think this is probably more to follow. So we like the energy sector. We like natural gas in particular. We think that's a long-term theme that could be played here. And there's some really good stocks to play in that sector. There's a closed-end fund, KYN, that we like a lot. Yields 8% and trades at a 12% discount to NAV. Healthcare, same way as energy, overdone, maybe a little bit earlier in its turn. Way oversold condition, starting to break above the 20-day. And so there's a whole bunch of stocks to own there. I actually do like the large pharma stocks. United Healthcare is something we picked up off the bottom. And then the biotechnology stocks is where we'd like to focus. We don't want to focus on just the group in general. We want to be more pinpoint. Focus on those ones that really have big upside and a reasonable amount of risk associated with them, and not a lot of risk. There are 160 biotechnology stocks trading below cash. So there's a lot of carnage in the group. You have to be selective. Some of those are not good companies, but some of them are real gems. So this sector we like a lot. Speaking of biotechnology stocks, Fortress Bio. Now this one's starting to move. You can see off the bottom, it's up almost 50% off the bottom that occurred in April. So it's up much more than the overall group is. So there's something going on here. What's going on is they're changing their model, and that's really bullish, right? Changing their model from creating companies and then taking them to Wall Street, taking an IPO, getting them finance, and then getting diluted over time. So that's where they've really gotten hurt, is all the dilution that needs to occur by raising money to get these drugs developed. So what they're doing is that they're continuing to find these drugs, early stage, through research centers, through universities, and acquiring the drugs. They continue to do that, and they're using AI to do that, which is really positive. So they have less cash burn by having less employees by using AI. Big win by that, by the way. And so what they're going to do, instead of taking these companies public, is just licensing the drugs out to other pharmaceutical companies that will pay them a royalty for those drugs. So nice change in strategy. I think it's a nice winner over time. As an example, what they've done historically, Checkpoint, they were just acquired for $330 million in cash. I was hoping for more, but that's good. So by the time they sold it, they only owned 10%. They started with 100, now they only own 10%. They got $33 million out of it, which gives Fortress a pretty significant amount of cash, particularly with a $63 million market cap. So getting $33 million, that's a lot of cash. And then they have some really big events that are occurring. They have a PDUFA date, which means the approval date for a mixed disease drug, and that should occur on September 30th. highly likely that that gets approved, really highly likely. They also get a voucher with it. What the voucher is something that's given by the FDA for the benefiting a small number of patients that really have a bad disease. So they give out these vouchers. These vouchers can be sold to large pharmaceutical companies that are willing to pay a lot of money for them. So that voucher is worth roughly $90 million to FBIO. They have a partner in this, so it's worth roughly 90 million. So they can monetize that plus the drug. Then they have another drug that will file for approval that they sold to AstraZeneca for 125 million. And so that over time they still have 125 million left to be received from that drug. So if you add all these up, Journey Medical, they own roughly half of that company. That company is worth roughly 160 million. So that's $80 million currently. Journey Medical is going to go up. It's going to continue to go higher. So you got 80 million there, you got 90 million here, potentially 125 million there. You got some cash from Checkpoint. You're looking at something that's worth 3 to 400 million at least, and there's probably some more upside with some of these assets that they own, like Journey Medical. It's going to go higher, so it's going to be worth a lot more. And then they have a big pipeline of companies that they still own. They can monetize some value from that. So this is an example of a biotechnology company that's got very low downside, lots of upside. It's got a catalyst in front of it, and as you can see, there's something going on here. So as you know, we do a lot of work on biotech. We have a really good biotechnology strategy. We call it emerging healthcare, and beautiful long-term record. If you would ever like us to manage money for you, just reach out. If you're an advisor, it's on a number of different platforms. And then we also do tactical management. So the idea there is we don't want to lose money in a bear market. So protect our portfolios when the market starts to roll over. And then we also have income portfolios that kick off really nice income. And so as a collection, we've got a really nice portfolio of strategies that either an individual or an investment advisor that's at a larger broker dealer can go to the platform and select our strategies. If there's ever anything you need, just ping us. Come to my website, Patrick Adams CFA. Sign up for a hard copy of Market in a Minute. We'll send that to you every week. Take care.